Income Tax 2020, Practice Problem 1, Presentation Number 18, Itemized Deductions, Medical and Dental Expenses. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do believe they have a 30-day free trial, so if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1. In prior sections, we entered the information related to the income items, getting us down to basically the taxable income down here. And then we had the second section that was entering the adjustments. So we went through the adjustments. Now we might have some other income and adjustments in the future, but we went through the major items for those two items. Now we're going to be taking a look at the below the line deductions or the itemized deductions. So up until this point, we've been taking the standard deduction, which is the $24,800 for our married filing joint couple. Now we're going to look at the itemized deductions, and we're just going to keep on adding the itemized deductions to see whether or not we should be taking the itemized deductions. So they're going to be on the Schedule A. Now remember, in practice, of course, you're thinking, how close is someone to be itemizing and how relevant or how worthwhile might it be then to be gathering the itemized deductions. So if they're not anywhere near itemizing, then you're probably not thinking to gather the itemized deduction items to compare them. If they are in an area where they might be itemizing, then you're going to have to add them up and see whether or not the itemized deductions are going to be greater than the standard deduction. The normal thing that would push people over is going to be if they own a home and they have, of course, the mortgage on the home, because the mortgage interest is one of the biggest deductions there, as well as the property taxes on the home. So if they have a home, that's usually the thing where you're going to say, okay, now, I'm going to look into the itemized deductions. Also, of course, did they itemize in the prior year? Because if they itemize in the prior year, it's quite likely that they will take the itemized deductions in the current year. The other big component, which was cut down a little bit when the changes happened a while back, was the state taxes. So if you're in a high state tax area, then your state taxes can get quite high as you get a higher income individuals, and those could be deductible on the Schedule A up to basically a cap. But that could be significant as well to push people over to the point where they could be itemizing. So those are the major two. But we're going to start off with the medical expenses here. So let's just look at the Schedule A right now. We're going to go into the Schedule A. And we're going to look at it basically from top to bottom and consider each item from top to bottom. So we got the medical, we got the taxes, we got the interest, and we've got the gifts, and then casualty and other items. But in practice, just realize that the next item that you'd probably line up within importance would be the interest, meaning you'd have the 1098 for the mortgage interest. That's probably the next one you would do. But we're going to basically just go in order from top to bottom and just note how when I go into medical expenses, it's probably not going to be enough to tip us over. And then the taxes probably not enough to tip us over. And then when we get down to the interest, mortgage interest on the home, that's probably the factor that'll tip us over. So that's how we'll do it here. But again, in practice, just note your probably next biggest thing that you'll look at will be the interest you paid. So we're going to start up here though. Medical and dental expenses. So when thinking about the medical and dental expenses, oftentimes this is the one with that kind of weird paradox here, because as income levels go up, they're more likely to be itemizing due to the fact that they're going to have a house, possibly interest on the home, property taxes, and their state taxes could be going up. However, there's also this floor kind of thing that's happening on with the medical and dental expenses. So as their income goes up, they're more likely to be able to take medical and dental expenses because they are itemizing, but they also are not going to be able to take them. They're not going to be able to take them as much because there's this floor of the 7.5% floor. So that means that a lot of times the medical expenses, unless you have kind of like some significant area, may not be impacting someone, because if they're low income people, they're not itemizing, you're not going to get a benefit. And if they're very high income people, they're going to hit this limitation on the 7.5 floor limitation. So they got to be somewhere in the middle. They might have some special needs for medical expenses that are higher than normal for whatever reason. That's when you're going to go into here. So oftentimes, again, whether low income or high income, the medical expenses could get phased out either on the floor or on the ceiling. But we'll start in here. Note the information for the medical expenses is also a little bit more difficult to gather, because if you're talking about like W-2 income or 1099 income, we'll have a formal form for it. It's fairly straightforward. With the medical expenses, we could have a wide range of medical expenses, have questions as to whether they will qualify, and then we have an issue as to whether they got reimbursed or not. So for example, if you're talking about insurance, does the insurance qualify or not? Did they get the insurance through work and whatnot? And if they have medical expenses that they paid for, did they get reimbursed in some way, shape, or form for the medical expenses? You could have larger expenditures as well, especially people, you might have like elderly people that might be doing stuff to their home or things like that, like putting in a chairlift or something to go up the stairs that could be recommended by the doctor, or the situation where you have a whirlpool that sounds kind of like a jacuzzi or something like that that's recommended by the doctor, and questions as to whether or not those would qualify under medical expenses. So I won't go into some of those questions here. We're going to assume basically they have the medical insurance through the work, and then they have some large medical expense that they had during the year that we will include here. For more information on the medical expenses themselves, you could go to the item where we focused in on that in the prior section in the itemized deductions section. But we're going to be adding the medical expense here, and our main goal is to see it in conjunction with all the other items that we have been adding to the tax return, to see it in alignment with the rest of the data input. So I'm going to go back on over. I'm going to say that let's go to the Schedule A, and I'm just going to say we had doctor, dentist, and nurses, and I'm going to put in a nice even 10,000. Obviously, the documentation, they would have to provide us with that 10,000 in some way. They'd have to tell us, hey, we had medical expenses that were significant this year, probably over the 7.5. If they ask us about medical expenses, that's usually what we think. We're thinking, hey, look, you're going to need medical expenses that clear the 7.5% floor in order to make it worthwhile for you to basically gather those things up, right? So then if they say they got a significant amount of medical expenses, we're going to go back on over and saying, so now there's a $10,000 of medical expenses, and the $65,430 is what's on the 1040. We could see the 1040 here, and that's the adjusted gross income. So that's the AGI 65,130. Back to Schedule A. Back to Schedule A. So that means if we take 7.5% of it, we have the 4,907 floor. So that's the floor that they basically would need to clear. So if we take the 65,430 times the 0.075, we got the 4,907, and if we subtract that by the 10,000, we've got the 5,092. So that's a significant amount of the medical expenses, but it's not significant enough in and of itself to push us over the threshold to be itemizing. So we're currently at the 6,462. If we compare that to what is on the 1040 here, because they are married, then they get a standard deduction of 24,800. So it would have a significant impact if they were itemizing, yet they are not itemizing yet at this point in time, but we will be by the end of the problem. And so we're going to continue on next time to the taxes, which probably won't take us over the threshold. Then we'll get to the interest, which will most likely take us over the threshold by that point. So we'll continue on with that in the future. Let's just take a look at where we stand at this point. We're at the same spot here. So we've got the income of the 81,030. We've got then the adjustments to income, the 15,900, the 65,130, and we're still taking the standard deduction at the 24,800 at this point. It's kind of